Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Today is April 19th, 2020, Sunday, early afternoon time. Thank you for your patience. I didn't feel like doing it on Friday. And so I had a lot of things going on this week, so I pretty much went to relax on Friday, Saturday. I had some time with my friends and things like that. And so today, Sunday, I'm here to do the market update with you guys, and I think we're gonna change something starting this weekend or starting this video, as I've tweeted out that, and it's because I had some people very respectfully asked me, very kindly asked me if I could put some stocks in our analysis. And I know I've been only covering the indices for the last year, maybe year and a half or something like that. I know I've done that before. I think because the reason I did that was because I want to spend more time talking about indices, because if I start to have too many tickers, then I can only spend, because I don't want this video to go more than 30 minutes. Ideally, I want to make it with less than 30, like around 20 minutes or so. But you can see now we got 1, 2, 3, 4, 5, 6, 7, 8, 9 tickers that I need to go through. So, but I appreciate you guys that continue to follow me on Twitter and on YouTube and listen to my videos and kind words, and you guys know that I'm not a short-term trader. I'm a long-term investor and a position trader. So when I actually do get into a trade, even when I buy call options, and there are always leaps that goes out 1 year or out, but usually hold them long time. Like maybe 6 months, 9 months, sometimes even a full year. Just know that my analysis is always geared towards more long term. Though I know that a lot of people are always wondering what's going to happen this coming week, what's next week's going to, what about tomorrow? I get that. It's just that's our human inclination. That's our psychological behavior. Just we want to know what's going to happen in the short term. This is one of the main reasons why, that most people are short-term traders. And from my experience, from my research, if you really do want to have a good long-term net gain, you want to really explore the idea of doing things in the long term. Because in the short term, you can get whipsawed, you can get burned from trying to time it on a daily basis. I mean, even just looking at this and spider move, we made 32% up move in less than a month. Can you believe that? About 32% move, right? The low was put in March 23rd, and it's April 17th on Friday. This has never happened. Market has never gained that much in that short period of time. And I've talked about this before, that nowadays everybody got the stats, right? What did market do when we saw a 35% correction, right? Well, that's going to tell you that we've never seen a V-shaped reversal ever. That's also going to tell you that we've never seen market gaining 32% in less than a month. Never. And I'm not completely disputing the fact that the historical statistics could be of a help if you really look at it in a reference point and what has happened. But like I always say, that market always fools the majority, and if everybody's looking for a retest, market is not going to give it to you. And the reason why, do you know why everybody is looking for that retest? Because it has always happened. Every single steep decline the S&P 500 has ever faced in the history of stock market. Even if it's 20%, 30%, 35%, it has always retested lows. Always, every single time, almost every single time. Only time it didn't happen was 2019, which we talked about, right? And so far here in 2020, 30-some% correction that we have faced in March. So let's get into it here. Let's start with the spider. I've adjusted my moving averages a little bit. So last week when you watched my video, I told you that my 50 MA was setting at high. I actually adjusted to setting at low. So this moving average, that blue dotted moving, that's a 50 MA setting at low. The reason I did that is because it looks like there was kind of a scooping action, right? You see that 50 MA coming down, kind of scooped it here because that level acted as support 1, 2, 3, 4, 5 days before gapping up. Did you know that we saw something similar in 2019? So if I actually do that, if I actually adjust that 50 MA, where's 50? You see that 50 MA is setting at low, right? Price source set low. So if I actually go back, and then if I make that 50 MA closing, you can also see back in 2019, and you can also see that there's that candle seems very similar to what we are witnessed here. See that candle right there? That kind of a like hangman type of candle. But anyway, see that hangman type of candle there. What's interesting is we saw that gap up and then market continued higher because we actually initially saw gap down and a flush to the downside. Again, this was about 3-4% down day. 3% down day after suffering huge downturn here. And then it got up, right? And I think that was what? About 13% move. But again, this came down 20% recently. We're you know, with 2020 March, we're suffering like 32% downturn. But anyway, so you can see that 50 MA kind of scooping it up, and that 1, 2, 3, 4, 5 before finally getting back up here. It didn't come back to retest that 50 MA until what? About a month and 10 days later. So here, what I did was just to accommodate recent sentiment, current sentiment, I changed that to low, and now it looks like that. How it looks like that has been 1, 2, 3, 4, 5. So that basically, as of today, we are seeing that 20 MA is rising higher, and 50 MA is curling up. We got some of these long-term moving averages moving sideways, and we got the gap here that needs to be closed if you're a bull. And bulls have been doing really good job closing. There was a gap here that closed. There's a gap here that was closed. That was gap here that was closed. In that process, we have opened up 3 gaps. We got that breakaway gap, continuation island gap, and we got another continuation island. The interesting part about that continuation island gap, did you know that there was back-to-back shenanigan happening? Because you can see there was an up gap, but there's also down gap. That was Thursday, and this is Friday. So you can see here. Let me do this. That was an island top. This was Wednesday. This is Thursday. This is Friday. So Wednesday gapped up, Thursday gapped down. This become as an island top reversal. And I initially thought when I saw that potentially could come back down, retest some of these levels. But when we gapped right back up on Friday, now this no longer, that basically nullified island top. and turned it into an island bottom. And you can see how much strength that it has developed and the momentum ever since we saw gap down, gap up. That was back in April 6th. And I tweeted out about that chart, that how important that was. And ever since then, we saw these pullbacks, but the market continued to cultivate higher lows here in the minor term as we're looking at 65-minute chart. But I think this was crucial because I think Thursday, when we got down, I was like, okay, there's type of island top there. And I was wondering what was going to happen on Friday, but Thursday, market kind of went crazy. Like the futures were up like 3.5%, and we gapped up, and with that, this became another island bottom, and we thrived throughout the day on Friday. So that's what made that island. So now, in the process of both closing these down gaps, it's been opening its up gaps. And that's something we've been talking about last several weeks, that will be the first signs that you want to pay attention to, because these gaps are not getting filled right away. And I talked about how the longer they stay open, the better it is. And now that these we're slowly getting above these moving averages. There's good news about that, because these moving averages, now that the price is above it, as the price continues higher, when it pulls back, these moving averages going to potentially could act as pretty good support. Not only that, there is gap that is also going to act as support. That's why these gaps are always good, especially after oversold condition. Right? If this market was really going to create lower high and then continue on into a real massive bear market that could last year and a half, and we could suffer 50-60% drawdown since the peak, then these gaps would have been quickly filled. I would have assumed something like it would have went up, something like that, come down, fill it, go up, fill that, go up, fill that. And then we continue with the downtrend. Instead, it's closing out the down gaps, and we continue to have these gaps stay open. At this point, I don't want to say anything I don't want to use word like guaranteed or 100%, because nobody knows the future, obviously. But at this point, I have to say that the chance of S&P, okay, I'm not talking about the Russell 2000 or the any other indices, but on the S&P or the Nasdaq or the semiconductor, the chance of those indices to retest the lows is very, very low. And because of that, I think, and which I've been doing since 240s and 230s, any dips, it's buyable as long as you look at that accumulation, right? You look at that accumulation as a long-term investment, or at least towards the remainder of this year and next year. Because I don't know when the next shenanigans can come. Like this thing goes up, down 4%, man, or some shenanigan, right? The volatility returns. I don't think it will last. Like if we do see volatility return in the market, like 4 or 5% declines, I don't think it will last. And we saw that back in March 31st, and that's first time bulls shown the strength, because we saw 4-6% down day, right? 5% down, 5% down there, something like that. Do you guys remember? And we gapped right back up 3 days ago, 3 days later. Right there, we've seen the character has changed. And then ever since then, we've been rallying. So when I say any kind of pullback is opportunity to accumulate, I mean looking at things in a long-term perspective, not trying to time it perfectly, you know. I think there's a gap here, and we got some of the long-term moving averages here. So I think, you know, it'll be interesting to see how the market is going to play out this week, how to deal with these levels. I think ultimately we're going to get to about 313, 300. I think this level going to act as pretty decent, pretty strong resistance if we do go straight up. If we do see this thing going straight up, pulling back and doing something like that, and I would have to look at this in this manner if that happens. And if that happens, 287, 286 will be a great buying opportunity. But going into this next couple of days, it will be better to see this gap remains open, right? And holding it. If we can do that, then I think there's a good chance we'll continue to go up, and there's a gap that needs to be filled, the down gap and these two gaps here, right? If we do come down, fill this gap, then that's probably going to act as pretty strong support as well. Also knowing that there's a 50 MA in that vicinity. What bulls want to avoid though would be then coming down, gapping it down one more time. And that's what bears want to see, and make this into a bearish, you know, island top. But we've already seen some back-to-back shenanigan, so I wouldn't worry about that unless this thing comes, you know, looking at short term, unless this thing kind of coming back down and start retesting this low, or starting retesting that gap area, right? Again, if I see something, anything like that, I'll tweet things out. You can always follow me at 2K Kim. So that I'll take a look and see what happens this week. If we do see anything like that, like island and another like shenanigan and island bottom again or island top again, I will, you know, tweet it out and let you guys know. If not, and if we hold, there's a good chance this it could continue to grind higher and fill these gaps. Let's go to Qs. Qs holding up really well. And Qs is already here, right? In that vicinity, right? Remember, Spider, we're still, you know, about what, like 8% away, 9% away from that, you know, March 5th swing high. But Qs, we've already gotten there. We are already here. And not only that, you can already see the 20 MA, 50 MA already seeing a golden cross. This is the first time ever since we saw the death cross there. This is first time we're seeing Qs, seeing these two moving averages crossing to the upside. And we got the long-term moving average coming right there. And it will continue to become way more bullish. And you can see the the price action is holding above all the moving averages now. Short-term moving edge, long-term. So Nasdaq is looking very much bullish. And not to mention we got that, you know what I want to look at? Not to mention the monthly, right? And we got that long bullish engulfing candle. And this was a bullish piercing here. And this is monthly chart. So after the bullish piercing, bullish reversal candle, 1, 2, 3 months of follow through. Currently we have a bullish engulfing, which is even stronger than bullish piercing. So could this market, could the Nasdaq, obviously that was a monthly chart, will have its fluctuations, you know, throughout day to day, but looking at things monthly perspective, could we have 3 months of follow through to the upside? Let's go to equity here. Apple looks similar to you know, the Nasdaq, but we are not still at that this level here, early March swing high. But you can see all these moving averages are colliding, cluster in that vicinity. You can see that here. See that all the moving averages are colliding in that vicinity. I would have to say if this thing comes down, retest some of those levels, man. That's pretty good level to accumulate more longs in Apple. Obviously, Apple is looking very, very strong. And all these moving averages has been like just right on point. You can see that the first long-term moving edge acted as support initially, and then we breached that, and then the second long-term moving average acted as support. We got back up. Some of these short-term moving edge acted as resistance, came down, pulled back, and then we thrust above all these moving averages here, right? And you see they're all crossing to the upside, and that tells us that the sentiment is shifting, the trend is shifting. We're turning into a bullish sentiment here. And even like when you look at a weekly chart too, I think there was a nice retest that happening here. You can see right there, right? And I believe that was probably about 50% retracement. Yeah, so that's, you can see that was 50% retracement. It ended up tagging the last level. So these two levels definitely have strong support, right? Because there was a prior resistance, and then these peaks also act as support, not to mention last two levels of Fibonacci here, and that was a very, very strong support. We held that, probably not to mention that we got a rising uptrend support perfectly holding right there. So we got all levels, I mean Nasdaq, Apple, all levels looking very, very bullish. Let's go to Google. Google, similar story here, right? We got pretty nice, decent gap right there, right? So we kind of got, and Google's a little bit looking different than Apple. Apple, we saw that, you know, that 100 SMA, and you know, that's not 100 SMA actually, that's I think 150. That long-term moving average, all these we're above all the moving averages, holding up really, really well here, right? But on Google, it is above all the moving average, except that the blue long-term moving at one long-term moving average there. So that's kind of what we're holding up here. We got these gaps. I think initially the market is, the Google is going to go up and fill those gaps. I think any kind of pullback, you know, potentially we see a pullback this coming week, probably to re-challenge that gap area. And that's the good thing about the gaps. You know, when the gaps open, that gap area acts as support. So there's two support. Coming down, retesting that gap, that's the support. We got the 50 MA in the middle part, that's a support. We got that closing the gap area, that's a support. Also in that vicinity, we have a 20 MA residing in that. So we got a lot of support, meaning if it pulls back any of these levels, again, I also think that it's a good level to accumulate if you're a long-term investor. Because I mean, like Nasdaq, I mean not Nasdaq, but Google, if you look at historically speaking, you know, these are levels, a good level to accumulate. You want to accumulate these levels. I'm not for trying to time it perfectly on a daily basis, but for long-term perspective, the long-term capital appreciation, those levels, because Google usually, you know, how Google likes to move is these, you get the consolidations and then it makes a move, right? Let's continue here. Let's go to Netflix. Netflix, same way. I mean, I can just go here weekly and show you how Netflix like to move, right? You can see these clusters where there's a consolidation occur, we see a breakout, consolidation occur, we see a breakout, consolidation occur, we get a huge breakout, consolidation occurs, and there's a breakout. But you never want to chase it, right? That's why what I'm saying, you know, what I was saying about Google, you know, like, okay, let's go back to Google. Go to weekly. Why go long here? Why go long here? Why chase it after this thing thriving? Why not buy it when you see weakness in the market? You know what I mean? Like, so that's kind of what I mean, is that you don't want to chase it after it's been going up, because then you have to face a next drawdown. Again, we're talking if you're a long-term investor, right? and Google would have been a great level to accumulate. And even if you, let's say you've been accumulating, which I've done, right? Let's say you've been accumulating here, 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 and here. And you tell yourself, well, okay, I mean, I didn't make any money, man, for the last like 2-3 years. That's a different mindset. That's different mindset. Like, what if that's what you did here? That's at 2010, and you did here. You didn't make any money. You didn't make any money. You didn't make any money, and then you held it, and that's how you make money. All right? And the reason why, man, I have to say, the reason why most people are short-term is because they want to flip that money quick. They want to flip that money quick, right? That's why. And that's why they're always burned out. They always get whipsawed. They want to try to time it perfectly. Again, it's not. I get it. It's not for everybody. Not everybody's meant to. Not everybody. And I'm not telling you how everybody should be trading and investing in this market. Everybody got their own way of doing things, their own way of looking at things. I'm just telling you what has worked for me, how I'm doing it, and I guess I'm biased in this, but I think that's the only way to really truly, benefit in this market is to look at things longer term and try to ride the majority of move. Instead of going long, stopped out, going long, stopped out, going long, stopped out, it goes without you. You finally, like, how many times are you trying to go long, right? You got stopped out several times, right? Long, stopped out, long, stopped out, long, stopped out. And then you just like, you know what? I'm sick and tired of this stock. And you forgot about it. And then you come back several months later, oh my God, at 420, right? So Netflix is retesting this level. Definitely that's not a level I'll be accumulating. Best time to accumulate was down here, and actually that's what I was buying in this vicinity. This was maybe somewhere, and again, your goal is never to like perfectly buy at the low, And to become an investor, you also have to learn how to sacrifice short-term gain for long-term gain. For example, I was long on Netflix in that vicinity, and then I was making money, and then that money, that gain was wiped out. And then I bought more here. And then what happens is, because I accumulated here, the bulk of that position start going up with it. That's how you compound your growth, right? Instead, what a lot of people are trying to do is they're trying to time it in the short term, and a lot of times what happens is they miss out on a big move that potentially come. It's because this mindset of the fear of, that's why most people are short term. So you have to first figure out, okay, well, I don't want to sacrifice long-term gain so I can get short-term gains. What you want to do, again, if you want to be a long-term investor, you want to tell yourself, I'm going to sacrifice the short-term gains for the long-term gain, right? We talked about this. The employee mentality versus the wealthy mentality, the business owner mentality, the CEO mentality, right? The business owner, when starts a business, it's going to take years before he can profit. But that business owner will have to pay his vendors, have to pay his employees first before he even gets any payment, maybe a lot of times for years. But when he makes it, he will make 1,000 times, 100 times more than an average employee because the wealthy understands to sacrifice short-term gains for long-term gain. But most people don't understand that because they want to make money now. Let's look at Amazon. Amazon is just completely breaking out here. This is a weekly chart. The same thing is that, these levels, always good level of accumulating. I get it. It's never easy. It's never easy to accumulate. That's why I told you before, buying the dip is the most terrifying thing that you're going to do. We're not wired to buy the dip. When the whole thing, like it feels like the whole world's in hell, you have to spend money to buy stocks? It's ludicrous, right? So what a lot of people do, a lot of people like to wait and the condition becomes quote unquote safe and then buy. And then when things get worse, they sell. This is why most people buy high and sell low. and what you need to do the opposite. Looking at Tesla here, I mean Amazon, we had a very, very good move here. We have the rising pivot. You can see here we broke through that. Potentially you come back and retest. So we got that resistance there or support. And if you break below it, we got 2178, which is there's a gap area also. And if we were to, because we've got a little bit of like tail there, if we were to break lower, and you can see that that first level of Fibonacci is coinciding with that 2178. I think that 2178 is going to act as pretty strong support, given the fact that we all have a gap area and we got the rising pivot. Let's go to Tesla. Tesla is just fluctuated back and forth in a crazy amount. From the peak, it lost 61%. From the lows, it got back up 110%. Huge fluctuation. I don't own Tesla in my portfolio. You know what I mean? Like, there's certain company that you just kind of think like, there's huge fluctuation. If you bought these, man, you made that kind of money, that's great. There's certain companies just not feeling it, right? And Tesla is kind of one of them. I'm just kind of like, iffy about it, right? So I really never got into it. I never invested in Tesla. I was playing with some put options back in here, back in this vicinity, back in July. And ever since then, I didn't ride this, I didn't go long, I didn't go short, I just been kind of watching it. But I think a lot of people are very interested in this stock. So looking at things though, I mean, it's way above all the, like, as far as like a technical sentiment is concerned, it's very bullish. Look at that long-term move where it's rising now. Both of the long-term moving averages are rising. 20 MA is just going vertical. 50 MA, we just saw that bullish cross there. And we're way above those moving averages. We got a big gap that just opened, 703, 643. So again, comes down, retest that gap, it's going to act as support. If it comes down, fill that gap, it also acts as going to support. So we got double supports there. That's why, again, the gaps are a good thing. When bulls open gaps, especially in an uptrend, is a very, very good thing, because especially after an oversold condition, because when we see a pullback, that gap area is going to act as support, and also the gap fill area is going to act as support. In the worst case scenario, man, these things are coming down 600. There's a 20 MA there, there's 50 MA, all those going to also act as support because it was resistance prior, now it's going to act as support. We can even go back and you can see how that 20 MA acting as support, that 50 MA acting as support here. And here when we saw a big gap down that made it overshoot, we got back up, came down, these moving average sure did act as support, and then we continued higher, right? That's kind of what I mean. If we pull back, but this is such a big gap that if we start to fizzling here, I don't think it's going to go any lower than that. Unless, if bears, you really want to see Tesla burn, you make sure this thing comes down, retest 703, gap it down, right? Turn that into island top, then there's good chance that it's going to come to about 500. Until then, I want to give benefit of to the buyers, and looks like there's good chance that this could continue to grind higher. Next level, again, there's a gap area here, right? So 879, 900, that's going to act as resistance, and that's probably going to be, if you're long, going to be your short-term support. I mean, short-term target will be 900 or something like that. Let's go GLD. When you look at GLD in a weekly, you can see that there's a nice base here, right? That's about like 7 years base, 7-year base, right? So that's a prior resistance acting as new support. And there's rising pivot. See that? Right there. So prior resistance acting as the support there. And ever since then, we've been faithfully cultivating higher lows and higher highs. We broke out 7 years of base, and I think this thing is looking like continue to resume with this primary term uptrend. That's a primary term uptrend. We see a pullback. That's a 50% retracement, and I think gold is getting ready for the next move. And a lot of people might be thinking, well, isn't gold going higher is negative for the equities. Actually, that's not the case. I don't have time right now to show you. Maybe I'll show you next week. I can compare gold and spider trend. You will see them, they actually move together. If you look at a big picture, don't look at it on a day-to-day basis, but if you look at a big picture in a macro sense, a primary term sense, you'll see that how they can trend together to the upside. So it's not necessarily that gold is moving higher, gold is breaking out. Well, that means negative for the stocks. It's actually not true. One last one, I'll let you guys go with this, is a crypto. Well, crypto is still kind of a, here, let's look at weekly first. You can see on this weekly, the problem with the crypto right now, this Bitcoin. Okay, so it looked like it was going to break out, but it didn't. So what we're going to do, we're going to adjust this a little bit to here, that peak. See that right there? So we got this peak, this peak, this peak. That's lower high. And then like that, right? So we got the lower highs, and in the shorter term perspective, you got the lower highs, and we got the lower lows, and now we are just below this trend or the horizontal pivot, right? This acted as a support prior to, and now acting as resistance, right? But we don't know, is this going to be a bear trap where, you know, let's put a box there, so maybe we can follow up next week. So if this actually becomes a trap, there's a good chance it can shoot right back up to that downtrend resistance. If not, we're still in an intermediate term downtrend. So look at all these moving averages are kind of falling down. So you really do want to give benefit of doubt, except when you see a strength breaking out to the upside. If that's the case, there's a good chance we're going to get back up to this, you know, falling resistance there. And if the bulls really want to turn this around, what they need to do is they need to get up, maybe even break higher, turn this into a higher high, pull back, higher low, and then cultivate higher highs and higher lows. Right now, we don't have that. We got lower highs and lower lows. In the intermediate term perspective, I want to give benefit of doubt to the sellers as far as technical is concerned. But we got kind of one variable, kind of a wild card here. If this, because we're hanging around, if this is a bear trend, we don't know that yet. If we see a strength to the upside, there's a good chance it's going to come right back up to about 13 and 12. So this will be kind of like, okay, are we hanging around here so we can thrust higher, or are hanging around to cultivation of a lower high? And that's to be, you know, reviewed going forward. So that's it for me for the weekend. And you guys have a wonderful weekend or rest of this Sunday evening. And I'll come back to you next weekend. Again, you can follow me at 2KKim on Twitter. And if I see any kind of development in the market, I will. I usually tweet things out throughout the week, you know, sharing charts and my thoughts and things like that. So I'll talk to you guys next weekend.